Okay, crash, bang, boom. Watch the regional banks fall. Stock market, bow, falls off roof. Why is this happening? Well, we're gonna delve into a little Greek mythology. How many people are familiar with the story of Hercules and the Hydra? Well, see, the Hydra is this mythological beast, and oh man, had poisonous breath, could breathe fire. And Hercules was tasked with killing the Hydra, and he'd go there and he'd fight, chop one head off the Hydra because of multiple heads, and another two would grow back. So it took him a while, but he eventually figured out that the most obvious solution to the problem wasn't the right one, and eventually they figured it out. Actually, his nephew, I think, came and helped him out. They chopped off the head, then they burned the stump right away so the other heads couldn't grow back. Anyway, we've been told that everything's okay. Everything is awesome. We've heard it from Joe Biden. We heard it from Jamie Dimon. We've heard it from all these people that all these regional banks, banking system is okay. Well, I guess they're technically right. It's okay if you're Jamie Dimon. It's okay if you're one of those too big to fail banks, because guess what? You are getting assets on the cheap. Not only are you getting assets on the cheap, you're getting the FDIC to help bankroll these purchases or these mergers or whatever the hell you want to call them. Anyway, this is not going to solve the problem. It's not going to get the rot out of our system. It's not going to do it. All of these little Band-Aids and cure-alls that come from government regulators and whatnot, they're not going to work. Like I said, it's going to be great. It's going to be great for JP Morgan and some of the big banks out there that are able to handle all this. But you're looking at all the regional banks right now collapse. Why are you seeing collapse? People coming to the realization say, whoa, wait a second here. The stock is going to get wiped out. I want out of the stock. Man, oh man, if the books aren't right, who knows? Who knows what government regulators may start knocking on the door saying, wait a second, we're going to have to seize your bank. We're going to take it over the course of the weekend, and we're going to call Jamie Dimon up, or we're going to call, I don't know, one of the heads from the other banks up, and you're gone. And again, shareholders get wiped out. Again, this is part of the problem with too big to fail. And that's where we're at right now. I've actually had plenty of questions coming in regards to comparisons to this situation, to 2008, 2009. And there are some similarities. There are. However, this is a lot different in the sense of the systemic nature. You want to go back to 2008, 2009. You remember the phrase counterparty risk? There was a lot of that that was going on. You're not really having that now. More akin to what we're seeing to the S&L crisis back in the 1980s. But again, it's good to go back and look. And it's unfortunate that many of the pundits on TV, they don't do this, and most certainly our regulators don't do this. Let's take a look at what just happened not too long ago. Again, it's fresh in my mind because again, it was a pretty traumatic period of time and what we were dealing with, 2008, 2009, and what transpired. And some certain similarities in the sense that the government wants to fix it. They want to step in. They want us to believe that the regulators can solve the problem. We don't need more regulations. We don't. That old Forrest Gump saying, stupid is as stupid does. People talk about, what if banks are going to fail? Banks always fail. Banks have been failing for a long, long time. Banks have been failing prior to when this country was founded, for crying out loud. Banks fail. I tried to give you proper perspective of this yesterday. You do realize that the banks that were lost this year so far, the asset values were greater than all the multiple bank failures, all of them included in 2008. You go to 2009, same thing. So again, it was handled. It was handled, and people say might give people some comfort. No, I don't think depositors are going to have any issue, but it is a problem for capitalism. It is. We've gotten to a point in time where, you know what, it's the picking and choosing of winners and losers has become, I don't know, an all too often occurrence. Not to say that JP Morgan hasn't been doing the right thing. It has, but you leave a lot of people out that could take advantage of this situation. And I'm going to be honest, myself included. Man, I'm going to be honest. Would I like the opportunity? Would I like the opportunity to start picking at the bones of some of these failed banks and taking a shot at some of their clientele? Absolutely. Absolutely, I would. We don't have any more. I'm out. I'm not too big to fail. And again, part of the problem that we have is we've entrenched these powers that be. Look at it this way. And again, I wrote about this actually in 2008, and it's when I first used my Hydra Hercules analogy. We're talking about the financial crisis, and at that point in time, my eldest was quite young, and I remember taking him to. I used to live in South Florida at the time. We used to go to Busch Gardens in Tampa, and they had a pretty neat zoo there. And I remember my son asking me, at the time, you'd see this animal. I mean, they had these massive vultures there at Busch Gardens, and he'd be like, Papa, is that a good animal or a bad animal? And I had to explain to him that the vulture was neither good nor bad, nor was the shark or anything else. I said they're all God's creatures, and they all serve a purpose. They're all necessary. They're all necessary. And again, a little kid, I'm going to be honest with him. I don't know if he necessarily understood what I was getting at. You got this big, scary looking vulture or scary looking shark with teeth. But again, to have a dynamic economy, all of us, you want to call us vultures, sharks, we play an important part. And I'm being honest with you. Don't hate me and what I do. Don't because I'm a shark, because I'm a vulture. I take advantage. I take advantage of when things go on sale. I do it for my clients. Is that not the right thing to do? To look for value? Again, I like to be involved in the process of getting the clientele of some of these banks. I'm out, man. So it is what it is. Okay. Been heading in this direction for an extended period of time. But again, you do see the problem there, right? You do see the problem with too much power in too few institutions. And that's what we got. That's what we got out of government regulations coming out of the financial crisis. That's what we got with Dodd-Frank, which quite frankly, it was a joke. We were making fun of it at the time. Didn't solve a damn thing. It just, again, it entrenched powers, put a layer of regulatory capture on. And what's going to save this country, people? You got the slogans out there. You got MAGA, make America great again, all these things. Getting back to a meritocracy and the pure practice of capitalism. The pure practice of capitalism. Not handouts, not subsidies, not regulatory capture where certain business interests have a leg up on others, not because they're necessarily doing a better job or might be bigger, but because guess what? Everybody else is regulated out of the equation. Again, another reasons why we're seeing regional banks collapse right now. There's this fear that regulators are going to step in and they're going to raise capital requirements for many of these institutions. Okay. Do you think that the massive banks, they don't have any problem with that? And what was an unintended consequence of the maybe it wasn't unintended. Maybe it was by design. Again, I have to believe that the folks over at Bank of America, the folks over at Morgan Stanley, JP Morgan, Goldman Sachs, I have to believe that they're cutting bigger checks than the folks are over at PacWest. Much bigger check. So again, you've built these powers in and they're able to take advantage of these situations. You go back to Dodd-Frank 2008, 2009, you regulated banks out of business. You regulated credit unions out of business. They couldn't afford the regulatory costs. And I've made this clear on plenty of occasions. Again, this is Small Business Week, I think Small Business Month. And again, we all know that I'm small business. Small business, the overwhelming majority of my clientele are small business owners. Again, small business, it takes it on the chin with this stuff. And I started my company. When I started my company in the 1990s, early 1990s, there were certain costs that were involved. Regulatory costs, SEC, insurance, all of these different things that we had to do to get started. And I look at what those costs are today and how expensive they are today and adjusted for inflation compared to back then. And again, I know how much money I had, how much money I scraped together and saved to start my company. I wouldn't be able to do it today. I wouldn't be able to do it. I would probably make the calculation that, this is just not worth it. Just not worth it. Again, when you're young, you obviously you're a little bit more carefree. But again, you take a look at the risk reward and you say to yourself, gee whiz, this is what it's going to cost me just to hang a sign outside my door. Again, part of the problem. And that's what we're losing here in this country as comes to small businesses. And, we'll save that for another podcast. Anyway, WatchDogOnWallStreet.com is our site. WatchDogOnWallStreet.com. Take advantage of all the stuff that we have there, whether it be our podcast, newsletter, personal CFO program, you name it. WatchDogOnWallStreet.com. Have a great day.